Hello everyone, welcome to this educational presentation of if I could only use one trading tool, this would be it. Now before we begin, I want to wish everyone a very happy and prosperous new year. This is going to be our first presentation on a Saturday morning from the new year, so I want to start things a little bit differently. Usually I open up our educational presentations by sharing with you a chart. But because it's a new year, because I want to make a point here statistically, I'm going to start out by showing you some stats here that have actually stood the test of time. And I'm saying this not to scare you or not to wake you up this early Saturday morning, but really just to make you aware of the statistics behind trading. First of all, it is a fact that 80% of all traders lose money. Now, when I say lose, I don't mean that you're going to go into a small drawdown or losing phase. It means, these statistics mean that 80% of all traders will ultimately give back everything that they have for trading. All right. Now, it's also a fact that 15% of all traders will break even. Now, that's not really bad in today's markets, actually. Even if you're breaking even, that's okay. You're still not losing anything, but you're putting in a lot of hard work and a lot of determination and effort just basically to tread water. Now, the last fact is this. This means that only 5% of all traders are consistently profitable. Only 5 will generate consistent profit. So if we have 100 people today in today's presentation listening to me right now as I speak, only 5 of you will consistently make profits, okay? Now, if you want to see what this looks like on a pie chart, this is the way it would appear. As you can see, that large portion in red represents the losers that will ultimately lose all of their nest egg for trading. That blue part here, this 15%, will generate, will signify and display the people that were just break even. And this small green sliver here is just the amount of traders that will generate consistent profits. So now we have to ask ourselves, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? Now, you've heard me say this before, and I really truly believe this. I believe that the amount of profits you want to make is never ending. The markets are like a big pie in the sky. There's enough for everyone to go around. It's not something where you have to compete and steal someone else's profits in order to gain yourself. There's enough for everyone. It's like a huge ocean where you can take out as much water as you want. You can take a spoon and take out that much water if you'd like, or you can get a Big Mac truck and put up as much water as you want. There's never any amount of profits to take. So if there's that much available for everyone at any moment, how is it possible that only 5%, a small amount of traders, are able to consistently capture these profits? Well, through what my mentors have taught me and what I've learned in the last 4 decades, there really is an answer. In fact, it's extremely simple. These traders, the 5%, are consistently on the right side of the market. In other words, they are buying when they should be buying, and they're selling when they should be selling. It doesn't matter what strategy, what market, what time frame you're trading. It just means that they're in sync with the overall trend. Now go back and look at your last 10, 15 trades. Most likely, the losses you had were because you were selling when you should have been buying, and vice versa, okay? So that's really what we're going to be talking about today. So welcome. This is going to be a great presentation. You're going to see how easy but powerful it is with this simple tool to get you on the right side of the market. And hopefully you can start 2018 on the right side and become a very consistent trader. That's my goal. That's our only purpose of Specialist Trading. So welcome. My name is Steven Primo. I'm the president and founder of Specialist Trading. And as you've just seen, or if you're new to my presentations, we are all about teaching you. We are first and foremost an educational company. We're a little bit different from other webinars you may have attended, where we're not going to share with you the master system or this technique. All you have to do is trade it once a week and you'll have thousands of % by the end of the year. We don't believe in that. We believe that the only way to become a consistent trader is through knowledge, is through gaining this knowledge, learning it on your own, and then implementing it on your own. So there's no need to go to a chat room to find out what everyone else is doing. There's no need to really listen to news if you don't want to get your answers from. And there's no need to watch some supposedly trading guru or pundits on TV to find out what they like. Once you have the knowledge, you'll be able to make your own trading decisions and leave that 80 percentile and become that 5%. that are able to consistently make profits. Now, I learned this myself because when I first started trading, I was a part of that 80 percentile. I moved into the 15 percentile, but it was very discouraging because I couldn't make any money. I was putting in a lot of hard work. I was doing everything I was supposed to do, but I was just breaking even. Well, I had mentors who taught me these things, and this was on the floor of the Pacific Stock Exchange. So it doesn't matter if you graduate with a degree in economics or if you just started trading 2 weeks ago. Everyone can learn the same things that will sustain them. Now, I learned these things some 40 years ago when I first started trading, so hopefully they will be able to shorten your learning curve so you don't have to be trading 40 years until you become consistent. So this promises to be a great presentation, but as always, before we begin, we are required by law to show you our disclaimer, so please take a moment to view it. I'm going to show you a lot of performance results using this tool that I really strongly believe can get you on the right side of the market. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. All of our examples are strictly for educational purposes only. So once again, we're required by law to show you this as you're taking a brief moment. And I'd also like to invite each and every one of you to follow us on Twitter. Every day I post different information, signals that our strategies have generated, also lots of bits of wisdom along the way. So feel free to follow us on Twitter. There's our handle right there. You may want to copy that down. Okay, so as I stated, we are different from other companies in that our only goal is to stress teaching. That's all we want to do. You know, we basically give you all the ingredients to make up this nice trading meal for you, but then we let you run with it. You decide if you want to trade that market. You decide what time frame you want to trade. You decide how many points you want to take. Do you want to get in and out quickly? Do you want to get, go for as much bang for your buck? It's totally up to you. That's the way trading should be. If there's one truth I've learned in trading in my 4 decades, is that no two traders should ever trade alike. Okay, I'm going to say that again. No two traders should ever trade alike. But the entire industry is based on you copying somebody who supposedly has all the answers. If that were true, if that works so well, then why is it that, once again, 80% of all traders fail? So there's no validity in trying to copy or mimic someone's signals or some master system that all you have to do is follow the up and down green arrows. There's no validity in that. The only way you will become consistent is finding your own way. Now, the good news is that's what we provide. We provide you at Specialist Trading and Pro Trader Strategies with all the education, all the information and techniques and tools that have stood the test of time. And then we work with you. So as you can see here, my goal is not to force feed you signals like so many other companies do. My goal is not to force feed you some master system. My goal is to teach you how to trade with a specialist edge. The same edge that turned my trading around some 4 decades ago. Hopefully, it will be able to turn your trading around as well. Now, I have a lot of slides, a lot of information to share with you today. So I don't want to stop at each end of each slide for a question. So if you happen to have a question, I ask that you kindly wait till the end of the presentation. We have a pretty good sized crowd here today. So if we stop at each slide, we'll be here for 2 or 3 hours. I don't want to take all of your Saturday afternoon away from you. So please write down and try to remember the question. I promise I'll get to it at the very end. Okay. The only question I will answer is the most popular one, and that is this being recorded? Yes, it is. Pro Trader Strategies will send you a link to this recording at the end of the presentation if you have to leave early or if you're having technical difficulties. But if you're not, please wait till the end of today's class to ask any questions. All right, so let's begin. Now we're going to show and share with you all of our slides and all of our displays today on our new PTS Primo Charting Platform. This is the platform we feel that teaches traders how to listen to the market. Remember, I've been trading for 4 decades. I would have loved to have something like this to teach me. It would have really shortened my learning curve. Well, I've put 40 years of experience into our platform. So everything you're going to be seeing today was generated on our new platform. Okay, so let's start out with a question, and I'm going to start out by asking you this question. What if there were a tool that was automatically designed to put you on the right side of the market? Now, I don't care if you say, well, Steve, yeah, you're talking about daily bars. I only trade tick charts. I don't look at that stuff. Or Steve, I only trade Bitcoin. So this is kind of fairly new market. So that kind of stuff doesn't work for me. I don't care what market you trade. I don't care what time frame you trade. I don't care if you only buy options or sell put. It doesn't matter. What if there were a tool that was automatically designed to put you on the right side of the market? Wouldn't that be great? Well, guess what? You don't have to worry because there is. And I would venture to say that 99.9% of you already have it. There is. It's called the buy-sell line. This was the first thing my mentors taught me 40 years ago, and I've continued to use it on a daily basis in my own trading every day, all right? Now, a lot of you are saying, okay, well, Steve, I don't have that indicator, or my platform doesn't have it. Yes, it does. You all have it. It's the 50-period simple moving average. Now, if there's one thing you'll learn from me if you attend my webinars, my free webinars, or my courses, if you become a student of mine, you'll see that trading is really simple. It's just us, the traders, that make it more complicated than it has to be. For some reason, we have been taught, we've been brainwashed to think that the more complicated your trading is, that's going to make it more valid. That'll mean that it's more sophisticated and I'll make more money that way. I thought the same thing 40 years ago, and guess what? It didn't work. So what I've learned is that it's the simpler things. If you keep your trading as simple as possible, that will get you on that road to consistency much faster than overcomplicating things. So I'm going to share with you this technique and show you how simple it is to be on the right side of the market, because simplicity equals consistency. Now, in order to use the buy-sell line properly, all you have to do is ask yourself this question before each trade, but you must ask yourself. So you see, I don't care what system or what trading plan you're using. I don't care if it's based on Fibonacci. I don't care if it's based on Elliott Wave or news. I don't even care if it's based on the full moon. It makes no difference. But before you pull the trigger on any trade, you have to ask yourself, where is price in relation to the buy-sell line? Okay. In fact, I would suggest or even recommend that you all get a little post-it and write this down and place it on your monitor. Where is price in relation to the buy-sell line? Because whatever strategy you're trading, I don't care if it's one of mine or one of yours or some other educators, when it generates a buy or sell signal, you should ask yourself this question. And once you ask yourself, before you pull the trigger, you'll only come up with two possible scenarios. Because if price is above, then you should only be looking to buy. So whatever signal your strategy generated, it should only be a buy signal if price is above. Now, conversely, if price is below, then you should only be getting sell signals, okay? I don't care if you have some master trading plan. If you get a buy signal below the 50, do not trade it. Why? Because remember, we're looking to capture consistency here. I'm not going to sit here and tell you that it works 1,000% of the time. It doesn't. But that's not what trading is about. Trading is about having consistent methods. Remember, leaving that 80 percentile and joining the 5% that consistently make profits? That's because they have a plan that works over time. It's a numbers game. So over time, sure, you may see a great short above the 50 or a great buy, a bottom picker below the 50, and it may work. But over time, if you do that over and over again, you won't have anything to show for it. Trust me, take it from someone who's tried this before. I always say in my webinars, it's like the slot machines, okay? Every once in a while, this is probably the worst statistically gaming scenario for anyone in the casinos in terms of having profitabilities. The odds are stacked tremendously against you. There's no odds in your favor. But more and more people always like to play the slot machines, okay? Why? Because every once in a while, the lights will go out, the bells will go off, and will generate this nice little win for you, and it gives you this false sense of security that you're doing okay. Okay, and so you think, wow, this is great. I just made 50 bucks, I made 100 bucks. And then they're designed to keep you there so that the longer you stay, you're going to give it all back. Trading above and below the buy-sell line in the opposite direction is the exact same thing. Every once in a while, you'll get a great win, and you'll think, wow, what is that Steve Primo guy saying? This stuff doesn't work. Because those things are designed to have you trading that way, because over time, if you keep doing them, you'll give everything away. Take it from someone who tried it 40 years ago. It didn't work then, doesn't work now. Let's look at an example here. This is a weekly chart of spiders. I'm going to show you a lot of charts. It makes no difference if these are a year or two old. It makes no difference if they were last week, because you can apply this right now to any chart you'd like, and you'll see this. All right. Someone looking at this would say, boy, Steve, in hindsight, how did I know the spiders were going to go straight up? There's no way anyone would have known that. Well, let's apply the buy-sell line, the 50-period moving average, because on a weekly time frame, yes, you would have known well back here in April of 2016 that you were going higher. Why? Because the market was telling you it's above the buy-sell line, and as long as it's above, you don't want to be selling. You see how automatically you just increase your odds for consistency tremendously by applying this simple tool? Where's price? Price is above, so we're only going to be buyers. All right. Now, sure, you could have had some luck trying to sell short right here, and then hopefully you would have captured it. But what if you got a sell short right here or a sell short right here? You wouldn't have made much money. Isn't it much better to look for buy setups? How about IBM? Okay. Now, so many people have lost money in IBM going back last year trying to pick a bottom. Some people said, well, wait a minute, Steve, this has got to be major support. We've fallen out of bed. We've come down tremendously. And in last year's summer, coming into last year fall, August, September, October, you know, the stock was tremendously oversold. Every support level had been broken. This was major, major support here. As well, every indicator was oversold. They were sold. We've never seen them more oversold than this. You have to buy this. On top of that, the earnings and the projections look great. You have to buy this stock. Okay. What happened? Went even lower. Okay. How could we have known to stay out of trouble in IBM and not try to buy it? Well, you apply the buy-sell line, and we would have known well in advance, right up here in March of last year, not to even touch this thing. Okay, sure, it had a few oscillations above and below, but the majority of bars were below. You can start doing this right now. In fact, go back and look at your last 10, 20 trades. Like I said, I can almost guarantee you that the reason you lost was because you're buying, just like buying IBM, below and selling above. All right, let's look at CREE. Now, someone looking at this will say, well, Steve, how can you tell what to do here? There's no real pattern. There's no real earnings announcements. There's no news coming out. There's no, the institutions don't care about this. So why would I be interested in this stock? Well, it's not that you have to be interested, but if your signal generates, if your strategy generates a signal, you have to know what side to be on. Now, we apply the buy-sell line, and once we're below the 50, we're only going to be selling this. But all of a sudden, it starts to firm up, and now it's oscillating above and below. But what do we have here? We have some closes above, so I want to tell you the rule of thumb. Look for at least 3 to 5 bars to close either above or below the buy-sell line before an overall trend is established. So if we look back at that chart, we see here that we were oscillating above and below, but what if we have here, we have a total of 5 closes above. So even though we're still basically, for all intents and purposes, going sideways, we have 5 closes. So what's the market telling us? The market, not some guy in a trading room or a chat room or not some guy on TV, but the market is telling us it wants to go higher. It's giving you this clue. And look what happened, okay? Now, did we have any idea it was going to go up like that? Absolutely not. But the market was telling us. So do you see how you can be on the right side simply by applying this tool? Let's look at UA. Once again, someone would say, boy, Steve, I just got killed. Every time we had a bounce here, I bought it, and then it just rolled over again. Bought again, and then rolled over. If you had applied the buy-sell line, you would have known going back last summer not even to touch this stock, Under Armour. All right, let's look at MRK. This is what we mean when we talk about consistency, all right? Consistency doesn't mean that, wow, I'm consistent, so I guess that'll mean I win every trade. No, consistency is a 2-step forward, 1-step back approach, meaning that you will have small losses from time to time. That's okay. Not every basketball player makes a basket on every shot. Not every entertainer has a hit album or a hit movie, okay? So that's okay as long as you're consistent, that you're able to make it back on the next try. That's what we're talking about, consistency. Now, right here, Merck was above the 50-period moving average. We had 5 closes above, and it went up a little bit, but then it started to head back lower. And now it starts oscillating above and below again. But right here, the market was giving us a big clue. What was it telling us? Well, we had a total of 9 closes below the buy-sell line. So even though it looks like we're just kind of going sideways, 9 closes were below. This is the market not telling you it wants to go lower. This is the market screaming it wants to go lower. So who are we to think that this is a bottom? Look at the major support, the institutions, or the volume is really picking up here. Why overcomplicate your trading by relying on those things? Just listen to the market with this simple tool. It's telling you it wants to go lower, and the stock fell 8 points in the next week. Now here's one thing, usually when new students of mine see this technique, their eyes light up and they go, oh my God, this is amazing, I'm going to be rich. Remember, this is a tool designed to get you on the right side. This is not a strategy. It's not a system. Simply because you see 1 to 5 closes above the buy-sell line doesn't mean you should buy at the market. Or 1 or 9 closes below doesn't mean you sell at the market. You still need structure. But we're just telling you a way to be on the right side. And then you can know whether you should be buying or selling. Now, I know a lot of you are saying, but this is just too simple, Steve. I mean, there's no way this can really work over time. I mean, a 50-period moving average, I mean, please. I mean, I've spent thousands and thousands of dollars on strategies, on systems, on courses. You know, you're giving me something for free here that's supposed to work? Come on, how valid can this be? Okay, I totally understand. I said the same things when my mentors showed me this 40 years ago on the floor, okay? But let me share with you another chart here. All right, this is a chart of the Dow Jones on our new PTS charting platform, okay? It looks similar. We've made new highs and we're kind of starting to oscillate, okay? Here's the only difference with this chart. Let's look at the date. This is October 1987, okay? We're going back 30, 40 years. This is a long time ago. What was the market telling us then? Well, we apply the 50-period moving average. As price was heading up, we were well above the 50-period moving average. But now we start to oscillate above and below. So that's the market telling us it's starting to have some doubts or starting to wonder whether it's going to sustain its upward move or maybe it's going to change its direction. It's closing below a couple of times. Now it's closing back up, closing below, closing back up. So you see here we have 3 closes below. Then we have a little bounce to the upside. But now we have more closes below, another bounce to the upside, and even more closes below. So don't you think there is a preference for the market telling you that even though we're bouncing above, we have a lot of closes below. So at the very least, you would have known at the beginning of October 1987 that the market's having some difficulty. It's trying to spell out what it wants to do. Maybe I'm going to get out, or maybe those stocks I was thinking about buying, maybe I'm not going to buy them after all. Or if I'm in the market, maybe I should sell half of what I own or move my stops up. And that would have been a very good idea because we all know what happened in the next month, okay? Now, the crash of 87 would have been comparable to a one-day market drop of 4,000 points today. So imagine the market being down 4,000 points. Would you have wanted to be in the market? Or would you like to try and buy in a market that's going down 4,000 points? I don't think so. So most people love to be victims as traders. They love to say, boy, how did I know? The big guys, they have all the power. I'm just a small little trader with a $10,000 account. I can't compete against those guys. Well, guess what? You're not competing against anyone. Most traders come in with this faulty mindset thinking you have to compete. Remember, as I said in the beginning, the markets are like a huge ocean. There's enough for everyone to go around. There's no reason to compete with anybody or anything. All you have to do is be in sync with it and take as much as you want. The trouble is, most of us never learn how to be in sync with the market. We never listen to it. We're always listening to some guy in a chat room. We're listening to some guy on TV, and they don't have any higher rates of consistency than anyone else. So why don't we just listen to the source, which is the chart in front of you? Now, this chart was telling us it was a little shaky about the market. Maybe you want to get out, or maybe you want to just stay on the sidelines, and that would have been very good. You would have saved a lot of money in 87. I know a lot of you probably weren't even trading in 87. Maybe I was on the floor during that time. Many of you probably weren't even born during 87. Well, that's okay. Let's look at another chart here. Here's a weekly chart of the spiders. Once again, we have the 50 periods of moving average attached. It's doing the same thing. It's oscillating now above and below. Here's the only trouble. This was in January 2008. So if you didn't know what happened in October of 1987, maybe you remember what happened in 2008, okay? Because the market was giving us lots of clues that it wanted to go lower, okay? And that was the beginning of the 2008 financial crisis. Okay? A lot of people got really killed during that time frame because they lost a lot of their 401ks. A lot of businesses went under. It was the beginning of a brand new recession. Don't you think the market could have helped you right here by simply listening to it? Remember, most of us don't listen to the market. We listen to some guy tell us what he thinks is going to happen. That's what I did. It didn't work 40 years ago. That's how you get into that 80 percentile, by giving everything away. Once you start to learn to listen to the market and apply these simple tools, you'll join that 5%. All right, so now I'm giving you a homework assignment. Go back and research your last 10 to 20 trades. As I said earlier, I can almost guarantee that your losses were due to the fact that you were out of sync with the buy-sell line. meaning that your system or your strategy generated a buy signal below the 50 period, just like IBM did, and it kept going lower and lower, or UA, Under Armour, or it generated a sell signal above the 50, just like in the spiders in the market, kept going higher and higher. You kept selling and selling and selling into it. Okay, look at the market right now. Look at the current chart. We've been going straight up for the last year. We've been above the 50 period moving average. So it doesn't take a lot of homework to realize that most traders are out of sync. Now do you see why I titled this presentation, If I Could Only Use One Tool, This Would Be It? Because this really has such high levels of consistency for getting me on the right side. Now, I've presented this to my courses and my courses before. I've presented in free presentations like this that I've shared with people how powerful the buy-sell line is. And once again, usually people, when they see this, new students or new members of mine, their eyes light up. And it works fantastically. And they plot at their 50-period moving average and go, boy, this is great. This is free. I don't have to spend any money. I can just automatically use this. But then all of a sudden, some other master trader comes around who says he knows everything, or some master system, and they generate tops and bottom signals, and maybe one or two of them work really well. So this is the first thing that students start to do. They say, well, you know what? Maybe that buy-sell line really isn't so powerful. Maybe I won't use it after all. And so they stray away from using it, and they follow this other technique, and it works for a little bit, and then they give everything back. And so a lot of traders say, well, you know, Steve, I have a hard time remembering to plot the 50, or it's just, I don't see it a lot of times. I know it's up there, but I'm too concentrated on a pattern or some system. So it's hard for me to remember to use it. So this is what we are offering today. This is our fluid feature. This is what we have on a new platform. Remember, I designed this platform with Pro Trader Strategies to make it easy for you to listen to the market so that you don't have to worry or don't have to always remember to plot the 50. It's all going to be right there for you. So here's what this is. The beauty of the fluid buy-sell line is that it not only tells you the overall direction of the market, but it also tells you the momentum of the market, how strong it is in that direction as well. Remember, you can apply any method, any strategy. I'm not here to tell you only to trade what I teach today. I'm just telling you what side of the market to be on. So let's look at this chart once again in GE, all right? Obviously, in hindsight, it's been heading much, much lower into November of this past year, okay? All you have to do with our PTS Primo Charting Platform is click on the buy-sell line, which is right here in the upper green strategy tab. It's already pre-canned for you. It's already right there. Click it on, and the minute you do that, you'll see this drop-down menu, and you'll have all these different options. Now, you can press just the standard 50-period moving average, but this is what I want to focus on today. This is our new feature. It's called the fluid feature. So what it does is, the minute you click that on, it will change the back of your screen. So you'll see GE go from this to this. All right, now people say, well, what does this mean? I don't understand. What does this reddish, orange, and bluish mean? Well, once you've applied this, the way to remember is that red sky at morning, traders take warning. In other words, if you see price in the red zone, you should only be selling. You don't want to be buying anything there. Now, conversely, if price has a blue background, well, blue sky at night, traders delight. That's when you want to be a buyer. So this is simplicity at its finest. There's nothing you have to do. The screen automatically is telling you. And here's the extra advantage you have to this. We're looking at the slope of the fluid buy-sell line right here. And you see how it's very strongly sloped to the downside, almost a 45-degree angle? The stronger the downward slope that is, that's the stronger the momentum. So this is almost assuring you that any sell technique you apply will have a certain level of consistency for working. So if that line is kind of going sideways, well, there's not much power behind that, overall direction. But if you see it a strongward slope to the downside, that's telling you that you have a very high level of consistency. Whatever method you want to apply will work in your favor to the downside, okay? Or how about HPQ, okay? Coming into November of this past year, last couple of months ago, strong move to the upside. How could we have known this? Click on the buy-sell line, and it automatically, in the fluid feature, will change the color. So we knew, most traders love to be victims. They love to say, boy, I wish I would have known to go long this stock. I just had no idea. Well, you would have known to go long it well back here in July in the summer because we had consecutive closes above. Remember, blue sky at night, traders delight. That's the buy zone. Red sky at morning, traders take warning. That's the sell zone. So you knew well in advance that you should only be buying back here. And remember, you can use any strategy you like. And right here at this point, this is where you had that strong upward slope. So this was almost assuring you that you had strength behind this upward move. Let's look at that weekly chart of the spiders once again. Remember we talked about how we would have known in 2008 to miss that financial crisis? Well, we click on the buy-sell line, click on the fluid feature, and this is how simple it is. It automatically changes the back of the screen to the fluid feature colors. Now, coming into that, into 2007's ending, the beginning of 2008, we had a strong upward momentum to the upside. But here's where we started to have trouble. See that? We started to have consecutive closes below. So this was the point where you sort of started to question whether you should be in the market or not. All right? At this point, I'm not saying that all traders would have said, I'm getting out and going short, because the buy-sell line strength is still moving higher. But you're having some doubts now. Why? Because the market is having doubts. The market's having a doubt whether it wants to close consecutively above or below. So most traders at least would have pulled out of their positions or not bought anything. And that was the beginning of the 2-year bear market. So see how well you would have done simply by listening to this tool. You wouldn't have to listen to any economic news or any forecaster or any so-called trading guru. You would have had all this at your fingertips. The market's telling you what it wants to do. Why not listen to the market, the thing you're trading, instead of some guy in some chat room? Now, a lot of people say, well, Steve, does this work with news? Because news supersedes everything, right? Listen, I'm not going to tell you that it works better than news, but oftentimes you'll know in advance what the market wants to do, because the market usually tells you everything in advance, even before news events. Let me share with you what happened a couple of months ago. This was in the middle of November. Buffalo Wild Wings sourced 25% over takeover talk, okay? So this is BWLD. Supposedly it was going to be bought out for $2.3 billion. The shares of the chicken wings and sports bar franchise surged nearly 25% of their value, a quarter of their value on that news, okay? Now, here's the way most traders react. They say, boy, you know, I never get involved in these things. I'm never the lucky one, you know, to have that stock and then have it go up. That's so lucky. I never, usually when I buy something, the news comes out and it's terrible and it goes straight down. Once again, traders love to be victims. They love to be the ones that, you know, they never get the right side of the market. They're always get the short end of the stick. And this is why I think most traders love to rely on someone in a trading room or some master system, because this way it gives them an out. If they're wrong, they can always blame that. But once you learn to listen to the market, you're in charge of your own trading, and you're responsible for all your losses. You're also responsible for all the great gains you're going to have. Let me show you what I mean here. Here's Buffalo Wild Wings stock, and here's where the news came out. This is where traders love to be victims, say, boy, how would I have known? There's no way I would have known to go long. Well, actually, you would have, because if you had the buy-sell line, you would have known well in advance right here. You had 6 closes above. This was a full month before that news came out. So right there, once you saw 6 closes above, you would have said to yourself, well, you know what? I'm going to use whatever strategy, whatever technique I've been taught, whatever technique I paid for, and I'm going to apply it because it's telling me that it wants to go higher. Before that news came out and points below, many points below, it was telling you it wanted to go higher. There's no reason to listen to any economic or fundamental news because the market tells you most of the time in advance. Now, as it was going lower, look at the strong downward slope in this stock. Okay, you could have shorted anything you wanted here. A lot of people are thinking, well, we've bottomed out right here. It looks like we're having some stability. Where is price in relation to the fluid buy-sell line? Price is below. It's in the sell zone. So we're not going to buy anything. I don't care who tells you a bottom is happening. Look how much lower it went. Only at this point in October, end of October, beginning of November last year, would we have even considered going long this stock. Remember, the market is always telling you what it wants to do. Not some guy in a chat room, not some trading guru on TV or a bunch of pundits sitting around talking. It's the market that tells you what it wants to do. So why do we listen to those things? Why don't we just listen to the market? Our job as a trader is really simple. We overcomplicate it. We try to figure out things, use all these convoluted indicators and tools and techniques. But our job is really simple. It's only twofold. It's simply to listen to the market, figure out what it wants to do, and then jump on board. That's it. That's all we have to do as traders. We don't have to overcomplicate it and use all these tons of indicators. We don't have to try and decipher what the news means or what the earnings are. Trust me, if it didn't work for me 40 years ago, it's not about to work now. And remember the statistics I started out this presentation. 80% of all traders will fail. They will give their money away. And 80% of all traders are still using these drawn out techniques that I used 40 years ago. Supply and demand, volume, Fibonacci support and resistance, institutional traders. I was trading with those things 4 decades ago. So if they didn't work for me then, they're not going to work now. I was lucky enough to have my mentors teach me these things, and they have been the cornerstone to being able to sustain me all this time. So hopefully I can do the same with you. All right, so let's recap before we go into question and answer portion. Remember, we talked about the buy-sell line. What is it? It's the 50-period moving average. That's all it is. But you must apply it on your chart, okay? You must have it on there at all times. And you must ask yourself before you pull the trigger, I don't care what method or strategy you're trading, you must ask yourself, where is price in relation to that buy-sell line? So if my system gives me a buy signal, ask myself before I buy it, where is price in relation to the buy-sell line? If it's above the 50, then okay, go ahead and take it. You have my blessing. If it's below the 50, please do not take it, because over time, it's a numbers game. You will, just like the slot machines in Las Vegas, you will give everything back. And then lastly, we shared with you a simple but powerful way to know what side of the market to be on by using our new fluid feature of the buy-sell line. It gives you 2 advantages. It tells you what side of the market to be on, and it tells you the strength of the market as well that you're trading. Now ask yourself, I'm going to ask you a question before you ask me. Do you think these edges could have helped your trading this past year? Once again, go back and look at your last 10, 20 trades. We just started the new year. Wouldn't you like to start off on the right track? Well, here's what we're going to offer you today. Thank you for taking time out of your Saturday morning. So we have a great Saturday morning attendee discount for all of you today. We're going to offer you our PTS Primo charts for a great discount. This is the trading educational portal that teaches you how to listen to the market. I wish I would have had this 40 years ago. It would have really shortened my learning curve, and I would have been able to apply these things that I have learned and accumulated a lot sooner, okay? Here's what's going to be offered. We're not just giving you the portal and saying good luck. Here's what's going to be offered. We're giving you the enhanced buy-sell line, all the different features. We have 4 different features and ways in which to use the buy-sell line, including the fluid. We're including that in our offer today. We're also including our top-bottom 25% feature. This is a short-term way for identifying what the market wants to do. The buy-sell line tells you the overall direction. The top-bottom 25% feature tells you the short-term direction. So now you know the overall and the short-term direction if they're going to be in sync with each other. We're also throwing in one of our best strategies for capturing large moves. That's strategy 3A. This is a great strategy that years ago many of our students paid good money for. We're going to throw that in for you. You're going to get all the rules. You're going to get the buy, up and down, sell indications, but you're going to also know why a signal was generated. We don't just believe in giving you buy and sell arrows and having you blindly take them. We want you to know why and become a part of the process. So you learn all the rules to this great trend trading strategy. For example here, let's look at this chart here. This is the news in BWLD. Remember, once again, the buy-sell line is included. And if you clicked on strategy 3A, guess what? You hit a drop-down menu, you click on signal arrows. There was a buy signal a little over a week before that news. So do you think these things can help you? Remember, with the buy-sell line, you know what the market is doing, what the market's telling you. Remember, that's our first job as a trader, to listen. And then secondly, we want to jump on board. In order to do that, we need some structure. We need a method. We need a plan. That's what strategy 3A is. So we're throwing in that free strategy. We're also giving you a signal scanner. This is a great offer because I have a pet peeve with scanners. I've used just about every charting platform out that you can think of. I mean, if it's been around, I've used it, okay? And one of the pet peeves I have is the scanners. If you want on a nightly basis scan for signals or for setups or for different tools, you know, you want it to be simple and easy. The only trouble is most of our scanners are so convoluted, the logic, it takes you hours to figure out how to generate a chart. Let me show you how simple it is. Once you punch up a strategy, in this case it would be strategy 3A, you click on scan, all right? And a drop-down page appears, the strategy scanner page. You would just simply click on load symbols, and we provide you with a list of different indexes, anywhere from ETFs, NASDAQ 100, S&P 500, top currency pairs, and whatever one you choose, you'll see them immediately appear, okay? Now you just click on scan, and after you click on scan, well, guess what? You'll see a series of green and red bars. The green bars mean that that's a buy signal in that particular equity. The red bars obviously mean that's a sell signal. And this whole process takes you roughly about 30 seconds. It's that simple. So you can automatically know if you're not able to be in front of your computer all day, you'll know in a couple of minutes where the buy and sell signals are for the next day. You punch up your charts and you'll automatically see the arrows appear. So we're throwing in the strategy signal scanner. We're also throwing in over 90 of the most popular technical indicators. So if you like to tinker under the hood, you like to experiment with technical analysis, you have the full capability here. But we know that we have a bias towards technical trading. So if you like to listen and use, remember, it's not our job to tell you how to trade. We're just trying to supply you with information. Well, guess what? You're also going to get free Bloomberg TV. We have a media page where all you have to do is click that on and you will have live Bloomberg TV that shares with you all of the news that's coming out, any economic forecasts or indicators coming out, and this is happening live. You can keep a page open with a media page while you're watching your charts. This is all included for our special Saturday attendee discount. And then lastly, it comes with personalized tech support. If for any reason you have problems pulling up a chart, the media page, you don't know how to apply strategy 3A or the videos for it, you contact our tech support and they will fix any issues as soon as possible. And we have lots of great testimonials about our tech support. So this is all included. Now, normally this would cost you close to thousands of dollars to have this. Well, here's what we're doing. This is the educational portal that teaches you how to listen to the market. You no longer have to do all the hard work because we've taken the hard work out for you. We automatically put everything pre-canned so it's all there. You're going to have 30 days of this for only $7. So there's no obligation after 30 days. You can decide if you want to stay with us or not. But we've done this presentation in the past, and we'd say that the majority, I'd say upwards of 80 to 95% of all traders stay with our platform after the $7 introductory package. Why? Because they see how simple it makes trading. Okay? So for $7, you can't even go out to lunch today in a fast food restaurant for less than $7 or $8. So we're giving you 30 days of all this information that I've accumulated in 4 decades for only $7. Here's how to take advantage of this. Contact my sister site. They're Pro Trader Strategies. They handle all of my courses and the discounts on the platform. I developed the platform with them. You can call them directly at area code 310-598-6677. Or the best thing to do is just simply go to the link, click on the link at the very bottom, and it will take you to the sign up page. Now, that link is not live. It's something you'd have to copy and paste onto your browser. But if you go to the chat box on the far right-hand corner of the Go To Webinar page, you'll see there is a live link posted in the chat box. So all you have to do is click that on, and it will take you there. Now, if you have any questions, any difficulty in doing this, say you don't know, you don't want to enter your credit card over the internet, call up Pro Trader Strategies. And remember, they have trading consultants manning the phones right now. They'll take your order. Or if you have questions, they will be happy to answer any question, no obligation after that, okay? Remember, this is 30 days of the use of our PTS charting platform with the fluid feature, plus with the strategy, with the scanner, with Bloomberg TV, and with personalized tech support. I can't think of a better way to start 2018 than with all of this great information. Now, I want to thank you so much. I'm going to leave this page up here while I open up our question and answer portion. The first question is, Steve, can I ask why a simple moving average and not an EMA, which is an exponential moving average? Most traders use EMA. That's a very good question. And remember, these are things that I was taught some 40 years ago. Trust me, in my 40 years, I've experimented with exponential moving average, with weighted moving averages, with displaced moving average. And in my 40 years of trading, the simple moving average works the best. Why? Because remember, a lot of traders don't just trade daily bars. A lot of traders trade intraday. They trade tick charts. Or there are some swing traders that like to trade weekly or even monthly bars. As I stated at the beginning of the presentation, we want to keep things as simple as possible. We don't want to overcomplicate our trading because then that's the way we lose our consistency. So if you have to change the moving average for each time frame or for each market you're trading, that makes things too complicated. You have to remember, and it's just too cumbersome. In my 40 years of trading, the 50-period simple moving average is the best tool I have known that works and transfers over onto any market and any time frame. So if I'm trading a tick chart and then I immediately move over into a monthly bar, I don't have to change anything because the buy-sell line works the best out of any moving average in those different time frames. If I'm looking at Bitcoin and then I transfer over to the E-mini futures, I don't have to change anything because it works just as well in those different markets. So that's why we apply it. Now, do I say you cannot use an exponential moving average? No, because this is not a system. This is not a strategy. You know, we're not entering because price closed once above the 50-period moving average. This is just a way to tell you to be on the right side. If you feel more comfortable using an exponential, that's fine. If you want to experiment with a different time frame, a different moving average, that's great. But take it from someone who's been experimenting with all of them for the last 4 decades. The 50 period, in my opinion, works better than anything I've ever used. So it's up to you. You can decide. But remember, this is just a tool to get you on the right side of the market. You are not buying or selling based off of the buy-sell line. You still have to add some structure, okay? Next question. If price is under the 50-period moving average, but the SMA is slope up, we want to sell or we want to wait until the slope is down? It's my suggestion, remember, once again, that you want to be in sync with the momentum. So let's say the slope is up, but price is in the sell zone or below the 50-period moving average. That's telling you two things. It's telling you that the market wants to go lower, but it's telling you there's not a lot of strength or conviction behind that. So what would I do? Well, in my experience, I would most likely sit out of that market. So if I got a sell signal, I may or may not take it. Depends. Remember, you're in charge of your own trading. We're not telling you not to take it. We're just giving you all the different ingredients that have shown consistency. Now, does that mean the price won't go lower? No, but I'm just trying to share with you. Remember, as I stated in the beginning, you're in charge of your own trading, not me. I'm not going to tell you what to trade or what the exact rules are. I don't believe in that. No two traders should ever trade alike. So I may sit out of the trade if I got a signal. You may say, no, I'm going to take it. Even though the buy-sell line is going upward, I don't care. That's great. That's up to you. That's the way trading should be. It shouldn't be where you go to a chat room and these are the rules and everyone has to trade the same way. That's silly. You know, that's what creates that 80 percentile of losing traders. You have to be in charge. So we may have one student that takes the trade. We may have another that doesn't. The only thing that I do recommend is that if you're in the sell zone, you should not be buying. I don't care what strategy or method you're using. If the slope is going up and you're in the red sell zone below the 50, the odds are against you if you buy it. Sure, it may work every once in a while, but the odds are going to be against you, okay? Remember, we're trying to instill consistency in our students. We're not trying to say we have the master plan and it works 100% of the time. We don't believe in that, okay? If anyone tells you that, as I've always stated, you should run because nothing works 100% of the time. So we don't believe in that concept. What we believe is supplying you with sound fundamental education that is consistent, that has stood the test of time. And if price is below the 50, what we've seen is over time, prices will go lower, okay? So why would you want to buy? Let's see, does it work with futures? Yes, it does. Now remember, any questions concerning data feed or futures or platforms, contact Pro Trader Strategies. They can help you more with that. I'm more in charge of teaching of the strategies and methods. But in terms of data feeds, in terms of different markets, they can answer those questions really easily for you, and it makes there's no obligation. I can just tell you, I use it with futures, I use it with currency pairs, with Bitcoin, with stocks. So there's lots of different markets, but the Pro Trader Strategies is the tech support side of that. So any tech support questions, they can answer much better than I can. Question, does the 50-period simple moving average work with Forex too? Remember, this is why I ask you to take the course and to use this, because the 50-period moving average works with anything. I use it trading tick charts on the E-mini. I also use it on Bitcoin. I also use it on stocks, on currency pairs. It makes no difference. I also use it on monthly bars. I use it on weekly bars. It makes no difference. That's why it's so powerful, because you can apply it to any market, any time frame. That's why we say we want to keep things simple. We don't want you to say, well, okay, if you're going to use currency pairs, then you have to use a 30 exponential moving average, okay? But if you go back to stocks on daily bars, then use the 50 period. Now, if you're trading E-mini futures, we want you to go to a 20 period displaced 50 period. You know, that's silly. It's overcomplicating things. That's the beauty of the buy-sell line. It's the 50 period simple moving average on any time frame, on any market, on any direction. Keep things simple, okay? After the beginning, I thought this was a recording, but I saw it on YouTube. But my question was responding, so I know it's live. Thank you, Steve. Oh, yes, you are. This is live. Well, yes, we repeat our presentations over, but we always have new people coming in. There's always a steady stream of people that have lost a lot of money spending tens of thousands of dollars as Pro Trader Strategies. We get this on a monthly basis of people that contact Pro Trader Strategies. And they say, well, I just spent $10,000 on this classroom that's supposed to work wonders. And I not only lost my $10,000, but I lost like another $5,000 trading it. This is almost regularly. And we say, listen, we wish you would have come to us first, because for $7, you can see how much we want to teach you. And we're not promising you the world. So this is why some of our presentations are done over, because we're always getting a new stream of new people that haven't seen this. And we really wish, I'm sure that most of you have spent tons of money on courses and lost a lot of money. I know I did. When I first started, I did the same thing. 40 years ago, I spent $10,000, $20,000 on this master system. And I applied it, and I had no idea what it was based off of. I just said, well, whenever it generates a buy, I'll buy. Whenever it generates a sell, I'll sell. And just like almost every other system, it blew up in about a month, and I lost all my money. So I started to learn that the real truth in trading is that you can't rely on someone or something telling you how or what to trade. You have to decide. You have to decide if you want to trade it conservatively, you want to trade it aggressively. Two traders can get the same buy signal and trade it totally different. And guess what? Both will make money. But the secret is you have to trade what makes you feel comfortable. You cannot trade what someone in some trading room is trading, because you may not feel comfortable trading that way. If he trades 30 times a day and you don't like that, I don't care how profitable that system is, you won't make money. Or if it trades once a month and you like a lot of action, I don't care how well it does over the years, you won't do well, because you won't like sitting around once a month for one trade. So that's what I mean. You have to find what makes you feel comfortable. The good news is we supply you with all the information, the tools and techniques that have stood the test of time, that will get you onto that level of consistency. And then we work with you to mold it so that you feel comfortable. You want to trade aggressively? Great. We can show you how to trade aggressively. If you want to have small risk, we show you how to do that. If you want to get out and take as much bang for your buck, we show you exit points on how to do that. If you like to get in and out quickly, we show you how to do that. Okay? But you're going to be in charge of your trading, not me. Okay? I don't believe in that. We don't believe in chat rooms. That's why we don't have them, because they're a crutch. You'll go to a chat room, you'll hear what everyone else is doing, and you'll decide, okay, well, if he made money, I guess I should trade that way. That's why that 80 percentile continues to exist, because you're taking away your own power. You're letting someone else decide how they're going to trade. You have to be in charge, okay? As we close here, remember, we're at the beginning of the new year. This is our very first Saturday presentation. That's why I wanted to start out with the buy-sell line, which is the simplest but most powerful tool. And once again, if I were stranded on a desert island and could only use one tool for my trading, this would be it, because you'll see how powerful it is. It gets you on the right side of the market with a high level of consistency. So, don't take my word for it. Go back and look at your last 20 trades. As I stated earlier, I can almost guarantee your losses were because you were on the wrong side. This afternoon, after we conclude in just a few minutes here, go back and look at 5, 10 charts. Apply the 50 and see how it could have helped you, okay? That's just the tip of the iceberg. We have so many other tools, so many other techniques and strategies that can get you on that road to consistency. So if you want to start out 2018 in the right direction, I can't think of a better deal. $7. I can almost promise you that most of you spent more money than that yesterday in the markets with commission costs alone. But for $7, you get tons of information that I've accumulated in 4 decades at your fingertips. And you can decide after 30 days whether you want to stay or not. There's no obligation, okay? So please come on board. I would love for you to have become a member of ours at PTS Primo Charting Platform, classes and courses. I'd love for you to see what we do, and I really think we'll be able to turn your trading around. So as we conclude, remember, contact Pro Trader Strategies, 310-598-6677, or you can simply go to this link here at the bottom. You copy and paste that, or you go to the chat box and click it on there. It's right there at your disposal. It's just very simple. And if you still have questions, call them up. They would be happy to answer any question you have. As we close here, I want to say thank you so much. I really hope 2018 is a better year for you than 2017, and I look forward to all of you becoming students of mine at Specialist Trading and at the PTS Primo Charting Platform. Thank you so much. Have a great weekend. We'll see you next time. Bye-bye.